All right. I see you over there, Anisha. What's going on? Yeah, that go live notification was a lot better, right? Trading stocks with the guys. You know, that other one I realized was like, nah, that ain't gonna work. It's a little something different. Good morning, Moji. Good morning, Aman. Good morning, good morning. Um,
Good morning, everyone.
good morning. Good morning. So, Alicia, I see you over there. Now, we were talking a second ago about the this GAN box and what else you can really do with it, right? Or like not what else you can do with it, but like what's the real, like what are the real key things we're looking to do, right? So let's see here. Let's get into it. Let me put this link at the top real quick. So for those that are joining us for the first time on Clubhouse, at the top, I just put a link to our Twitch. You'll be able to watch our screen. Right? You'll be able to watch our screen so you can see what we're talking about. Um, I'll break certain things down and just make sure that it's understandable and analyze stocks and all these things there. Right. Um, Now, wanting to know the best ways to use to interpret, right? The GAN. So look at what we got going on right here with Airbnb, for example, right? So we got to think perspective first, right? We think perspective first. So if I have a long term outlook, let's say I'm thinking long term, like I want to invest in 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 Airbnb, right? For example, right? So first things first, I'm going to look at the range that we're currently in. I'm going to map that out across the range here. All right. Just going to map it out across the range. And so you can see, that as of right now, ever since this recovery here, it's kind of been moving back and forth and kind of just bumping its head or finding resistance near the 50% portion of this range. All right. So it's been a while since we visited the high end of this range here. Now, this is where this starts to matter. Now, so I'm above the 50% retracement. We just got done talking about this change of character yesterday. I'm above the 50% of this range, but the highest we've gotten as we broke this mark is right here, about 143.80. Right, that's the highest we've got. So being above the 50% range, 50% retracement is solid. It's good. It's a good deal, right? But I got to think about the market structure around that, and so this actually helps me in that regard, right? So what it helps me understand is where's the nearest point of market structure to the 50% retracement, and it's right here, right? What if it was this? Well, in that particular case, we already did that, right? Right. Like let's say 50% retracement was down here. All right. So then you can kind of see, you know, you've already, broken that closest market structure point. From there, now you might be trading from here up to the to that particular, point of resistance that you had before, right? But so this is and we're gonna go through this and just gonna keep going. Let's just keep going, right? Now, what if I'm just thinking about a trade, right? Then I'm more near term with it. More near term with it. I'm thinking like this right here. All right. I want to look at this range right here. So that pullback didn't even make it to the 50% retracement, which actually says that that's a sign of strength. All right, that's a sign of strength. So this was a close above the high of the low day right here. After this sign of strength, all right, again, a pullback that didn't make it to the 50% retracement before bouncing. I could take this as I could have took yesterday as an entry. All right, looking at it from this perspective. All right, so like I said, you wanna interpret the current state of the market in this regard as well. So you would say down here, all this down here is bearish. All right, all this up here is bullish. Okay, so while you're up here, and you pushed up to this point, you're pulling back now, and you stayed above the 50% retracement, right? So then it warrants a trade back towards the high end here. So like I said, and this right here could have been could have certainly been a click trade as well. And for the record, when we look at it from an investing perspective, you can still take swing trades from an investing perspective. The same thing we did on Netflix, right? So if you go back to that that I had there, right? For example, right? This change of character right here probably sparks the swing trade, especially if we can actually get a close above it and hold above it. So we can hold above this point. We're gonna be good money. Right now I'm looking at 164. So it's an even bigger trade. So you got a bigger trade out of this. You're gonna get a bigger trade out of that. 50% retracement is your line in the sand. Closest market structure to that is right here. If you're talking about I'm long now, I'm long here. Right? How much downside do we have from breaking this point here to here? It's about 10% there. What do we have here? Right, this is about 15% here. All right. So you're going to look for options, in this regard, and you probably have a for me, a set limit. You say, okay, cool. You know what? Whichever comes first. You guys know I like to use secondary stops. You should always have a secondary stop. Some of you guys have never heard me talk about that before, but yes, I believe you should have a secondary stop loss always, and that secondary stop loss usually just be a percentage point, right? So like this mark right here, or let's say 30%, right? Which is gonna come first, or sometimes you put in a trade exactly what you're willing to lose, right? So I've already had a predetermined amount, so I'm like, okay, cool. If that's the case and this stop loss works perfectly fine, I wait till we hit that stop and I'm out. Right, whatever's left over, I take that and put it back in cash. Right. But again, we're all just working around this mark right here. Now you can also look at the 50% retracement itself as somewhat of a stop there. But you want to look at a certain amount below it. Maybe you don't have to wait all the way till this point, but as you're breaking through it by a certain amount, maybe you have another market structure point on your chart. So as you're breaking the 50% retracement, maybe the bottom end of the micro trend is there. Maybe the 5-day trend is down there, whatever it may be. So things that line up with your 50% retracement can be a little more significant as well. All right. So those are some of the best ways to go about it. As far as using that, you can see I still have it here. All right. I'm looking at um, from this low to this high because basically that's what happened, right? So we fell from the all time high, fell from the all time high, we popped up from there, right? Pull back, couldn't get back to the high here, so this would have been a weak low, but you get stopped right at the 50% retracement there. So it's good money, good business. All right. Everything's looking all right, solid so far today. Let's start by taking a look at our indexes. Well, Anisha, does that help?
Yes, absolutely.
And you see me using it more often, so you get even more of an idea. And every time I bring it up, I'll point it out. Just for the record, see this point, see right here, October 10th, this big sell off we had, same point, same exact point right now, right here today, and that's a high volume node. It's a high volume node. All right, we're gonna come back to that. Let's start by analyzing our markets this morning. Let's go. SPY. All right, here we go. And this was interesting too. Here we had already, marked this up, and so that drop through there. I mean, it kind of made sense. This was a rising wedge. At that point, boom, you get caught. You're caught slipping. So let's see here. So SPY right now still inside the range. Oh, by the way, I tried all last night. No go. We gonna figure something out, but this ain't gonna be it. This ain't gonna be it. We'll see. We can see if we can figure it out another way. I'll probably have it where it'll give us one of those things, and then I'll have it where it's like, and this, and I'll add to it, and I'll maybe like have it like down here somewhere. I'll probably have it down here somewhere, and it'll measure that. So we will see. So I'll probably have the most recent high here, most recent low here. And then it'd be like, okay, cool. If we're pulling back from a high, what's that retracement? If we're pulling back from a low, what's that retracement? We'll probably put like that. All right, now.
Question.
Yes, ma'am.
Which version are we on?
72.
I just wanted to confirm.
Yeah, on 72. So right now, main issue with SPY. Right, main issue with SPY. We need to get back above that the weekly pivot. All right. So we're somewhere in this area right here. So I mean, preferably like you can just look beyond weekly pivot. Let's get back to the highs. Let's just get back to the highs. I mean, we could talk around the weekly pivot all day, but our thoughts seem to go beyond that anyway. All right. We need more out of the market right now than we're currently getting. I shared something with you guys this morning. What's going on with Japan? That could be a problem for us in the medium term, short term, medium term. could definitely be a problem for us. So when I say medium term, I'm talking, pretty much up to 6 months, pretty much. All right. Short term, think of that as 45 days or less. Think of it like that. Right. Um, so yeah, those Japanese interest rates. Um, before you know it, they're going to be putting a slapper on the market. So we'll see how it plays out, in the long run. But I'm definitely not taking that for granted. We're gonna watch this VIX. All right, this VIX hit some lows down here. Anywhere near it, and we're anywhere near 14. We're gonna move that May money out to August. Everybody with me on that? We get close to 14 on the VIX. We move that May money out to August. We're not gonna let Japan catch us slipping. For those again, for some of you guys, that may be joining us for the first time on the stream or whatever, we don't just you know we don't just stare at charts and you know um, hope we can figure out what's happening from that, right? We understand what's happening. We use the charts to take advantage of it. We use technical analysis to take advantage of what we already understand, right? That's that's the name of the game. Right? If you really want to play this game the right way, right, you want to use the technical factors to take advantage of what you already know and understand. That's how to play it on a supreme level. All right, gain understanding, gain knowledge, build up. All right, and then the more you do that, the more you can look back and say, okay, you know what? Look at this chart right now. I see the VIX dropping. By my understanding, all right, I don't have to keep staring back at the market every 2 seconds right now. Because this drop in the VIX says, we're falling into a bullish regime. All right. So I can look towards those levels higher. We saw Microsoft death cross yesterday. I was saying this morning, I think they're going to pop back up above the 200. That often happens. You get all this stuff going on in the market, and then all of a sudden, um, the thing you didn't expect just pops up on you. All right. So we'll keep that in mind. Now, in the meantime, I do want to point out once this XLK trade plays out, once that plays out, our next move is going to be TQQQ shares. All right. Plan ahead. Y'all know how I do. Plan ahead. All right. So let's write this down. Let's talk about why. Matter of fact, who thinks they can tell me why? Anybody think they got that already? Any potential ideas? Good morning, Jazz. So why y'all think our next player is going to be shares of TQQQ?
Well, we in the XLK, TQQQ goes in the direction of up, bullish. So I guess, are you trying to just remove your risk or like out of the options, or because From what I'm understanding, you're thinking that the QQQ will still continue to go up, but you're gonna move some of that money out of the XLK. That's also up. So yeah.
Yeah, no. You actually, you're on point. You're on point, right? Now, everything you just said is on point. You're missing one detail, right? That one detail is going to be by the time we're getting out of the XLK, by the time we're getting out of tech, right? And we want to take that next move, right? You can see here we're already at 50, almost at 56 on the RSI. So it will probably be over 60 by the time we're getting out of there. And by the way, like guys, hear me out on this. Hear me out on this one, right? Every single thing you have at your disposal can be a target. And that's why that's why I was like, you know what? I'm gonna move these targets out of here, right? You got the targets on your chart, right? The ATR blueprint, that's setting targets for you. You got support resistance levels right here. Those can be targets for you. You got deviation levels can be targets. You got retracement levels can be targets. You got moving averages can, you get my point, right? Like you have all this at your disposal right now, all of it, right? But you might be shocked to find out that I really would exit a trade when we hit 60 on the RSI. I really would do that. You might be surprised to find that out. Like, keeping it simple. Everything is not a labyrinth, a maze to find your way through. Cool. I see we're approaching, that gap right there where we might find some other ways to look at momentum and whatnot, so we start looking at it from that perspective, so you can see QQQ is a little higher on the RSI right now than the SPY, so as you see this right here, so you might naturally be finding some resistance early and whatnot, and but is the market about to bleed all the way back down here? I don't know. I don't see that being the case, but we're gonna find out. Again, we're coming off of a stretch where, Apple was literally at 6 on the RSI. If we can't get a bounce out of this, like I said, you better believe something is off. And we've already started to see those valuations deteriorating. Right? I had to put Netflix in the blue yesterday. I'm just saying. I had to put Netflix in the blue yesterday. I want y'all to think about that one. All right. So, not Netflix, I mean NVIDIA, I meant to say, in the blue yesterday. All right. That's I'm just saying, that's a real big thing, to be happening there. So we're gonna watch. We're gonna watch. We're gonna play the we're gonna play the game that we expect to play. We're gonna find out what happens from here, and let's check Netflix real quick. Let's check all of our trades out real quick. Check Netflix. Okay, Netflix down a little bit right here. So Anisha, so this is one of those moments here where guess what you can do. I'll go to the 2-hour chart right here. All right. I take this GAN box right here. High of yesterday to the low of yesterday. What are we doing? That is a 50% retracement. Seeing that? So I just want to know, how deep was this retracement? That's what I want to know. All right. Just want to get some information real quick. So this is a 50% retracement of yesterday's range on Netflix. If we start going beyond that, well, Houston, think we got a problem. You know, we don't need to be doing all that. Okay, so we're gonna watch them there. What up, Prince? Good morning, sir.
When you ever look at BT,
VT? No.
Vanguard Total World Stock, yeah.
What you got?
It's kind of makes us going along the lines of what you were talking about.
I'm gonna check it out right now. Let me see. I'm just writing down the stop loss real quick here. So we got this, you know, it's just a normal day, right? So this isn't like the other day when we were looking at like Donald Trump's, whole spiel, right? On days like that, you just want to use your wide stop, right? But it's just a normal day now. It's a normal day, and your ATR is highlighted in red. Which stop loss should I be using? Wide, tight, or average?
Tight.
Okay, right? Use your tight stop. So, we're not gonna let Netflix take us, you know what I mean? We're not letting that happen. Okay. So, 82, 85. So pretty much if Netflix is closing below this area here, all right. So we're looking for again a close below this level. Okay, it's time to run. I am gonna be one thing I am gonna be doing really soon is I actually am going to I'm gonna be doing this right here. I'm gonna be bringing everything back to the 5-day ATR. Let's see what that looks like actually. Let's bring it all back to the 5-day ATR. So it's about 81.99. So I might as well just do it right now anyway. All right, so about 81.99 actually. Right, we'll do that. All right, and the reason I'm bringing everything back to the 5-day ATR is because we need to match some things up with each other over here. So these have to match. So I'm gonna just I'm gonna get rid of the scales. That way you guys will actually know what because you'll be able to see it, is what I'm basically saying. So you'll know what that number is in case you want to use it elsewhere with other things and whatnot. All right. So now you know it's always going to be this joint right here. All right. So, but we bounce it off of that. And you said AT, right, Prince? AT.
Virginia Tech.
Oh, VT. I knew that. Okay. I see. Okay.
Gold goes January 27th.
Okay. Let's see. This is the world stock, so global. You get see this area right here. All right, this is previous supply right here. So you kind of look at it like this. Look at it like this right here. Like that poem, right? So we'll see. We'll see how this plays out. So let's see. Let's see here. What's up, Terrence?
I've been following that short land nudges. I think that I have to take a nice serious into my portfolio. That's pretty much all that was.
Okay. Yeah, ain't nothing wrong with that. I think it's needed. That's why I told them today. I said, look, we're not gonna watch the VIX hit 14 and not stock up. Like it can get ugly out here. It can get ugly, and I'm not playing with these people.
We added to our VIX portfolio?
No, not yet.
Okay.
We wait.
Just FYI, I'm
Yes,
gonna
ma'am.
be in and out. So if I come in asking like what happened, don't be mad. I'm getting in and out.
Nah, you're good.
Thank you.
You're good. Initial jobless claims down to 200K from 209 estimate. Interesting. Very interesting. It's a good day so far, though. It's a good day so far. Yeah. Definitely a good day so far. So you got that downside in Netflix there to start off the day. So that's weighing on us a little bit. And just to think, right? Those Netflix calls dropped almost 20% to be where they are right now, which is only down maybe like 4%. Right? So we watching them. Let's see what they do from here. Let's see what they do from here. So now you can kind of get the point there now, like I said, so you'll see me using it throughout the day just to kind of see what's going on with different things. Neat little tool. Yeah, and Prince, with everything going on in Japan, that world ETF might be a really good hedge.
Yeah, the two that's following the US. Japan. Unwind the carry trade.
Mm-hmm.
Yeah, and that's what it look like. It's, you know,
Mm-hmm. Mm-hmm. We'll see, man. We'll see. They're supposed to have a decision in Japan today, I believe.
really.
Yeah, so we'll see how that goes. So that's why I brought it up a little bit earlier.
Interesting.
Um, see how it plays out. But like, remember, like that's what I was telling you guys before too. All this opening higher and closing lower, this all distribution, y'all. It's all distribution. So we gotta play our cards right. Sometimes you just gotta, cash out and step back. So Netflix 81.99. Let's check Bank of America real quick. So what's going on here? Mm-hmm. Mm-hmm. 51, 20. Let's hit that high volume node right on the dot. Hit that high volume node right on the dot. Let's see here. Hmm. 41.74. Stop loss is real close to where it was the other day. Just a second. What was this? 141.62. Hey, our stop loss is 141.62. Remember, it stopped at 141.63. I guess somehow, some way, it went back down there and actually touched the stop loss. It's actually crazy. So we're at 141.74 now, which is, let me see here. So it'll be just below these right here.
Inside of XLK.
You good, you good. Let them work. Let them cook. You need these pullbacks, Moji. You need them. That's what makes the world go around.
I agree. I need a little bit more pullback in the health field, though, but that's not happening at all.
No. I don't mean like that. I don't mean for us. I'm just saying for the market. I'm saying.
But yeah, no, I agree. I mean, for the market as well, but me specifically.
What Jasmine Sullivan said, get out your feelings. I can't remember how she said it. How she say it? Say it for me.
I never really listened to Jasmine Sullivan like that.
Mm-mm-mm.
But we had other options. That was when I think Sierra was out there and Monica was like, it wasn't just Jasmine out here. The only Jasmine song is a Jasmine song. Like I put a window, I put a bullet in your car, I put a window.
She puts the windows out to
There you go, that one.
bad memories during that stuff.
Oh, sorry.
Now let's be clear, man. You know, Jasmine got most of them shorties beat that you was just talking about, but we ain't gonna talk about it though. You know what I'm saying? We gonna leave it alone, you know, because they all go, they all great.
I'm not gonna argue it. They're all great.
You said Sierra, you know, she great.
She really good.
Nah, she's great. So, you know, she keeps it consistent, man. She's still doing it.
That sometimes, honestly, that's more important than talent in this industry. You treating it like a job. A lot of them don't. You know?
Right, consistency.
Yeah.
Yeah. Let's see. What else we got here? So we got our stop losses locked in. We know what we need to see there. We're gonna watch to see if those play out or not. Because you know, we're not gonna, you know, we're not gonna play any games for these people. So Netflix is still above that 50%. Warner Brothers Discovery says it is confident of achieving regulatory approval for Netflix merger. This just in. Let's go over to FinViz real quick and let's see what's going on with these sectors here. Communications on top, and Netflix ain't booming? Stop playing Netflix. Stop playing Netflix. There's no way communications is the number one sector, and you playing with us. Now, I better see some skyscrapers coming soon.
What did you read before that?
Warner Brothers, that one.
Uh-huh.
They said they are confident that they will get the approval for the Netflix merger, which could be actually what's weighing on the stock, because we all know that, you know, you can just tell the market does not like this deal. You know, they don't like the deal. As Netflix has been getting crushed ever since they proposed that they would be the ones to buy them, all cash.
They're a bunch of haters. Yes, they are.
Terrence, what's going on, brother?
What up?
Yeah.
Where you there from the road?
Not Netflix.
It's okay.
Yeah, I'm really curious about the whole Netflix deal. All I hear is that it's going to shake up a lot of people's income streams and comfort level. So for them, it's just saying. I'm curious about your sentiment in which you read that you know, people are like they don't like the deal.
So it's not. So when I say they don't like it, right? I'm not talking from a personal perspective, right? I'm more so saying it's clear that the deal doesn't match the valuation, right? So the way Netflix plans on acquiring the company says that Netflix is worth less today, even though the sum of the parts of Netflix is worth much more than they're trading at today. So at any point, the market could come to their realization that they need to, go ahead and handle that business. But, as long as they keep talking about this stinking merger, you might have some problems. Because the valuation just doesn't match the acquisition amount. They're taking too much cash out of the business, man. So, I mean, in a nutshell, you would say they probably would prefer that Netflix just borrows the money.
Okay. So when they're talking about all cash, right? How do we know that is not included?
That's the purpose of calling it all cash.
No. But in a different term. But if I'm gonna buy a business, right? I've already talked to you about let's say all the people on the stage. And I've already talked to them like, hey, this is my plan. My name will be on it. I'll carry the bulk of the financial load. But I need a bill from each one of y'all, right? Up front. This is what I'm doing. And if the deal doesn't go through, you get your money back plus interest.
Then it's not all cash.
Well, but you've already given me the $1 million, so I already got the cash.
Otherwise, we would have seen the debt pop up on the balance sheet. They can't do that.
Okay, that's shit.
Yeah.
It's not street economics.
Right. What they call it, bar napkin economics, man. So that's the whole point of calling it all cash is basically to say we're not going to borrow the money. That's basically what I'm saying. That's the whole point of calling it all cash.
And I lost the 100%. I completely was thinking like, so Terrence fundraising thing.
Yeah, Terrence was like, so we gonna tell them this? You know what I'm saying? Well, over here, we doing this. You know what I'm saying? Sleight of hand, baby, sleight of hand, baby.
Right, Molly.
You know what I'm saying? Get them looking this way. We going this way. Yeah, nah, but yeah, man.
I really do that. Big win. I think that's it. Trying to go in the hard to capital. Yeah. Just you can't do that again. Okay.
But the stock split doesn't help either. They don't get any money from a stock split. Yeah, think about that.
I get it.
Yeah, if they want to issue shares, they get money from that.
Yeah, but what's further down?
Right. So, but again, it's basically it's internal versus external financing.
Yeah.
Right. If they want to finance it internally, that actually is the better way to do it. Right. But the market may not like that very much because, well, now you're betting because that's okay. You have to remember this. That's our money. That's my money you about to spend. So you gotta think about that when you think about they're saying they're gonna do an all cash transaction. That's like saying I invested $20 million in your store 10 years ago, and over that time period, I get paid, royalties or whatever, but I own a certain amount of the company, and you were like, yeah, next week, man, we're going to be buying, Starbucks, and I'm like, yeah, we have to talk about this. That's a lot of, so that's kind of how the market looks at it. Like, wait, whoa, what? Did you just say you're gonna spend all our cash on this? Why you don't go borrow the taxpayer money? Yeah.
And is, I'm assuming that it's the anticipation of infusion. Because you could, well, if you fold it into the Netflix model, but no, if I was doing it, I would wait 2 years before I change any type of advertisement or royalty structure that existed currently in Warner Brothers. Keep that revenue stream going. Also, that would also allow me time to let the existing contracts either expire and or renegotiate.
Yeah, I don't know how they're gonna handle all that, but you know, I think that it's I think it's good for them, you know. But I think in the long run, I'll have to really sit back and just wait for the studies. I like to wait for the studies to come out. You know what I mean? Like I put that one up. Did I put that one on SanDisk today? Y'all saw the one from SanDisk? Yeah, I did. I think I put the study out on SanDisk today. You know?
Yeah, you did.
Yeah. So it's like just really understanding what really made it happen and how did it work, you know? And so like you kind of get this inside look at why Micron won't stop running, and now it's like, I'm a little less impressed, Anisha. You know what I'm saying? A little less impressed today. Because you realize it's really because I've already known about the hiking of the prices. I already knew about that. But I couldn't say that was the main catalyst for the growth until today. So this is it. This is it. Yeah, we're gonna have to wait till y'all calm down a little bit. Wait till y'all calm down a little bit, because if y'all doing all this just because they raise prices, what y'all gonna do when those prices got to come down?
It's being one.
You know what I'm saying? Yeah. So like with the whole Netflix situation, it's like how they handle it. It'll be broken down later. I try not to be the one to try to break some of that stuff down. That's why I try to keep my points of reference very broad. But where I get my information from, I get it from everywhere. So by the time this deal is getting done, I'll be able to read through the real details, These are the real details. Okay. Oh, okay. That's what they're doing. They're doing this. Okay. Okay. I see. Tap into the earnings calls, and we have our new systems now that allow us to prompt, right? Our new systems that allow us to prompt the what do you call it? Prompt the Quarter app to actually read through the transcripts for us. Get us straight there. Let's see what the analysts are saying about the deals, and so over time you get bits and pieces of the puzzle. But I never try to assume I know the whole deal because I just don't. Like, I don't know the whole deal. I don't know how they're gonna deal with it. Um, you know, I just know, as far as I know for right now is, I doubt it's gonna hurt them to add these, legendary these legendary film catalogs and show catalogs to their repertoire. I doubt that's going to hurt them. Like, although Netflix is making more money now than they ever have, I think that it's Netflix was never better than when they had access to everything. I think that was the best days of Netflix. I think it's still good now, still great now. People just love to watch TV though. So, you know, does again back to the like, am I really that impressed? No, I just like the cash flow. I like the money, right? And I understand the business. Rule number one, you know, as far as like when it comes down to not losing money, understanding the business will help you avoid that more than anything else. So that's why it's like, okay, cool. I can see a company that I like, but I'm not investing in that company until I can tell you for sure I understand them. You know, like that's it. If I can't understand them, I'm like, nah, I'm good on that. And understanding them on the most basic level though, just the most basic level. I don't have to be an expert on the business, right? Like you take ChargePoint for example, like um, they they ran a network of charging stations, in which case not only allow them to charge for the hardware, but opted people into their software as a service. Hence, putting them in a position to earn recurring revenue. Um, that's the bottom line you need to understand right there. It's the bottom line you need to understand right there. And if that can't work, then um, okay, cool. Yeah, well, we can start reading right there. It's not working. All right. You just kind of keep it simple. Which, by the way, haven't looked at them in a long time. I think the downfall of ChargePoint more than anything was um, that real call sign to let you know that there was more trouble in in the EV industry than we thought. You know, I think so.
Well, did you hear about the new deal Canada signed with China?
I heard about Canada and China working together, but you can break it down for me more because maybe there's probably something I don't know.
Yeah, Biden had originally got Canada to impose 100% tariffs on all Chinese EV vehicles, and Canada has now reduced that to 5%. So Chinese EV that are better and cheaper than Tesla will be flooding the Canadian market. So
we should look at that. Check you out. See that? That's how this works. That's how this works. All right. All of us get better and better and better. And over time, you know, now we now we feed each other all the info we need. You know?
Marie, you forgot to add the call sign. Yeah, you guys. This is Logan reporting from the street.
So Lord.
that makes sense.
Nah, but that actually is a huge piece of information. Huge, huge.
As a matter of fact, everybody on stage should prepare their call signs. So when they're tagged. So when they report something, this is reporting
We gonna wait to hear your music, man. Yeah, we gonna see what your music sounds like. No, I'm talking about your you talking about this little special beat report music you supposed to be playing in the
Yeah.
background.
What's your fall off sounding like, Terrence?
Right.
It sounds like lips smacking. Eating.
Hold on, man. Don't be jacking my call sign. Snack eating is my call sign, man. What's going on here? Oh goodness. Is it too early for apples? I'm joking. It's never too early for an apple. Look at you. Look at you.
An apple a day keeps the doctor away.
That was a lie.
With these with our apples. 21st century apples, maybe 1800s apples. Not our
Non-GMO apple.
yeah. Oh, food is trash. It's sad. Beyond that, it's awful.
Speaking of that, I need to order some trash. Since my wife is on the way back. Yeah. To order some trash.
He wants some Chick-fil-A. Come on.
I want some real garbage food, man. Chick-fil-A is too nice, man. I want some real garbage food, man.
Shay, don't just land.
Spice and pies.
I'm saying I want some real junk, man.
He going to Mickey D's.
Yeah. Thank you, Anisha.
Trash and expensive.
Purchase.
I was shocked when I realized that McDonald's no longer had like the $3 meal, the $5 meals. And people were
No salads.
like, I just spent $40 at McDonald's.
Yeah, see, I'm gonna tell all y'all right now, y'all all sleeping on how nutritious McDonald's is, man. Y'all see Warren Buffett.
All that plastic meat.
Y'all see Warren Buffett, man. He good out here, man.
Warren Buffett and your president.
Exactly. Y'all see them out here.
Our president.
Listen, y'all. We was having a conversation about this the other day, right, Anisha? I'm like, because people was out here like, oh yeah, Chilean sea bass and all this extra stuff. I'm like, let me ask y'all a question, man. Like, how many more years y'all think y'all getting out of this? Like, you know what I'm saying? I'm not saying don't eat healthy. I'm not saying that, right?
You.
No, they won't. No, they won't. Look, check this out, right? Because most of them folks, right? You say challenge, yeah, challenge. Yeah, that's what I'm saying. Right. Right now, most of them folks, right, Anisha, they don't work out nearly as much as I do. Right?
I don't know that.
I do know. I talk to them. I do know.
Your plan is to cancel out the trash food with the workout?
No. My plan is to live my life and enjoy my food. That's my plan.
Part two.
Yeah. You deserve better fast food than McDonald's. That's right. Nobody.
I deserve to eat what I like. Okay? So if I want a Big Mac today, it's gonna be a Big Mac. Now I ain't had McDonald's in a very long time, but that's not the point. All right? The point is, if I want a Big Mac, well, hot dang it, I should have a Big Mac. That's it.
Not every day. But that's it. That's all.
You got people out here that's 100 years old to eat bacon every day.
You telling the truth about that one? You're right.
But they out here telling you
Bacon is good. That's real meat.
I feel you, but see, right? But my point about it, right, Anisha, is this. This is my point about it. My point is, right, everybody wants to tell you how to eat, but everybody can't eat the same way. Right?
That part.
Man,
True. Man.
You're a nutritionist. We both go to the same nutritionist and get a different diet.
Yeah. But that's why you gotta listen to your body too.
Right.
And do what works for you.
your blood type. Your blood type.
Right. You know what I'm saying? Like sometimes like I'll eat an egg. Like I don't think eggs are for me anymore. You know what I'm saying? Like sometimes I eat an egg and I'm like, yo, that just made me not feel too well. Like I like, it feel like it doesn't agree with me. You see what I'm saying?
Yep. Gotta listen to your body.
So go ahead, Alicia.
I'm just going to comment on what Mr. Finn said. Everything causes cancer, sir. It says bacon is known to cause cancer before they didn't know. Now we know. We wouldn't eat anything.
It's like, but see, but you know, this is kind of my point right there, right? Like, you gotta ask yourself to what degree, right? So, for example, I'll give you guys an example. I'm gonna give you guys an example. Don't shoot me on this one, but we was having a conversation the other day, and I said, okay, you know, because this guy just kept bringing up cigarettes, cigarettes, right? I'm like, okay, I said, let me just ask you a question.
Oh man.
Are you even aware? Are you even aware of how many more years a non-smoker gets over a smoker on average? No, I don't know. I was like, okay, so I'm not saying people should be out here smoking cigarettes. What I am saying is, right, some people abuse everything they touch. They abuse it. Right? And it's like, that's a discussion to have. Because the average
Moderation.
right, because the average non-smoker only lives 4 more years than a smoker.
That's it.
4 more years on average.
She said, "See,
No, that was my point. That's it. That's all you get. Right? So look at here, man. You want to live your life, live your life. Don't abuse it though. Stop abusing it. Stop smoking 2 packs a day.
I mean, but can you run? Can you run if someone chases you? Like, you can live.
Right. Okay. But so
At the end of the day, you say you can do anything you want to do, but do it in moderation.
yes,
Saying
yes.
everything is in moderation.
Do whatever you want to do with your life, man. Just stop. We abuse things. That's what we do.
Moderation. That's it.
you can drink. You can literally drink too much water."
Yes, exactly.
Get water poisoning and cookie poisoning and all of that.
But hold on, y'all. Alicia was going to say something. Go ahead, Alicia.
No, I'm just agreeing, you know, because my dad is 88 and he's a smoker and it drives me crazy. But
But he's 88.
his siblings are more sicker than he is. I mean, it's just weird. So I'm in agreement. He eats what he wants. Now, granted, 88 grew up, you know, and they ate from the farm. You know, I mean, there were things that they did that we didn't do. But I mean, he's 88. I'm not gonna say don't take a cigarette. I mean, you know, you
Got it.
Right, like you know, like again. So this isn't me encouraging the worst behaviors. This is me saying like the way we talk to each other nowadays about things is like, yo, you're not a psychiatrist. You're not a nutritionist. You're like, stop it. Just stop. You know what I'm saying? Like, and this ain't obviously I'm not talking about y'all. I'm talking about people in general, right? Like the way the world is nowadays, right? Like, a matter of fact, my wife and I was talking the other day, right? She was talking about what her nutritionist told her to do. And so right then and there, I'm like, yeah, like, look at that. Your diet is nothing like my diet. You know, like she can have dairy on a regular basis. You know, I was told to cut back on dairy. You see what I'm saying? So right then and there. You see the two big differences.
Dairy, and I think I hit my 30s, and my body said never again. We you know. I agree. You do have to listen. Your body is key because a lot of things I eat, people won't eat, but it's good for me. It could be bad for them. So yeah.
Right. But,
And remember, we're talking about American food versus other stuff.
Oh yeah. But we have.
You go somewhere else.
Oh yeah. Like first time I went to Korea, they were like, yeah, a lot of your liquor we don't allow them here because it has the formaldehyde content we allow in our liquor in America is so much higher than the rest of the world. So like all the stuff we drink here, other countries don't allow them in.
Let's tell you that sake will get you twisted.
Get me a bottle of soju, done.
They got that you know, like they making alcohol out of rice, man. You know what I'm saying?
Nigerians have it too. Call it palm wine. Like that's the Nigerian version of sake and soju. So
Right.
the old school stuff, longer and less formaldehyde.
Right. Definitely. You know, like so it's like, you know, for like I said, you know, for me, like I said, man, you know, yeah, sure. You know, stay away from dairy. Okay, no problem. But I promise you this. When I want cheese on my hot dang salad, I'm gonna put cheese on my salad. Okay?
You might suffer later, but you're gonna do it, right?
That's the thing, right? There was no suffering. It was just something they noticed in the blood work.
Oh, got it.
Right? There was no suffering. I was enjoying myself. You know what I'm saying? I was doing just fine. You know, cheese on everything. Huh?
Blood work says a lot down.
Right. You know what I mean?
Yeah, you gotta pay attention to that now.
Right. So it's okay, cool. So I said, okay, cool. I'll eat less dairy, no problem. You know, now I don't even eat cereal like that anymore. Uh, so every once in a while I have a bowl of cereal. You know, this and that. You know.
Look, it's all right. Like, and you could do all of it to the best of your ability and get hit by a truck when you go out.
That's my point. That's my point. You don't know which way you leave in this planet. Hey, look at here, man. Pass the burgers, sir. Okay? Extra cheese. All right? 3 slices of bacon on that thing. You know what I'm saying? Yeah.
I'm just gonna say, y'all advocating for bacon, but not for nuts.
Hey, look.
Like, I'm gonna say,
We ain't doing none of that. We ain't doing none of that.
Might advocate for either one of those.
Hey, look. Hey, look, Alicia, but you know, but put some avocados on top of that bacon. You know what I'm saying? You know, some omega-3s. Some omega-3s.
Omega-3s on your sugar rate.
You know what I'm saying? Let's put some omega-3s on top of that, and you know, but sprinkle some feta cheese on top of that avocado, man. There you go. How we talking business?
Sardines, red onions, feta cheese, banging.
That's it. Now, see, now, I'd probably prefer sardines, sweet red peppers, feta cheese,
Interesting.
roasted red peppers. Let me put it like that: roasted red peppers. Yeah, you gotta roast it.
See the inspiration.
You know what I'm saying? So yeah, I'm gonna have me some sardines today. Thank you.
But yeah, that's always been my wildest fears. Like, you do everything right and you still die early, I will be pissed. I will have to come back and hunt every doctor who ever saw me.
Listen, you know, I don't talk about this much because I would be trying to encourage nobody. You know what I'm saying? You know, I ain't gonna walk up to a smoker like you know, somebody trying to quit smoking and say, you know, you only gonna get 4 more years, right? You know, I ain't gonna do that. You know. The Lord, Moji. No, we ain't doing that, you know. Like, hey kids, listen, man, they told you this, but you be all right, you know, no, you know.
You have the candy cigarettes for the kids and they have to stop it.
Yeah. I used to use the candy cigarettes, yeah, I used to have them doing big business. You know? Joey the Camel.
Enough. And like, I'm terrible with vegetables, but I'm trying to get, like, I'm allergic to vegetables, but I'm trying. My work does show that, like, I eat the vegetables.
That's a whole other conversation.
I'm not allergic to vegetables. I just don't like eating.
Yeah.
We knew what you meant. We knew what you meant. And this guy down there talking about some, you don't know what moderation is. What is moderate? Like, oh Lord.
What you
Hey, that's crazy, Terrence. That's a great way to put it, actually. You know, like moderate. I put it like this, man. Moderate is, you know, anything outside of abuse, and you know, moderate is anything outside of gluttony. Simple.
That's a great way to put it. Anything outside of gluttony. Yes.
Right? Don't be gluttonous. Don't be gluttonous and don't be what you call it don't be abusive.
You know what? That's a great word. I might add that. Gluttonous. Yeah, that's a great way.
Yeah, there's people like, for example, right? It's like, hey, something tastes so good, right? But you're full. It's so good. Hey man, just throw it in the refrigerator, man. You know what I'm saying? You be all right. You know? Let's see here. I think it is important to know that food has been contaminated by some companies as a shortcut to gaining more money. So people who trust that the companies have their backs is problematic. I think the conversation about consciousness eating. All right, okay. I mean, yeah, I can understand that, right? But at the
I
same
don't think any of us don't agree with that stance. I think we all agree.
right, exactly. Because the thing is, right? Every day you put your trust in somebody else. Like, for example, um, somebody with that same opinion, right, may invest, may try to invest green, right? So ESG investing. You feel me, blessed? Right? Somebody may do that, right? And then at the same time, when you come back around, right? You find out that they've just been kind of packaging the good with the bad, like they did in '08. So it's like you invested in some solar farms here, you invested in some wind farms here, but you wanted a total energy fund. So you threw some money at Saudi Arabia, knowing what they was going to do with it, right? And so it's still an ESG fund, but they just say we're gonna do cleaner oil. You know what I'm saying? We're gonna clean that oil a little bit more, but it's not really any different than everything else. So it's like, all in all, we still kind of, the whole trust factor is like, you can say trust no one, verify everything, right? Cool. I can live with that. I can respect that. But at the end of the day, you're always going to have to trust somebody. Otherwise, don't bother eating. You know what I'm saying? Don't bother sleeping. You know what I mean? Like,
You just have to know where you're buying your food. Like, I get my meat from the halal markets. I get my fish. I go to the whole like Chinese fish market. I go to the farmer's market for my vegetables. Some things I get at local groceries.
Mhm.
So it's like there's all. I mean, it sucks that I have to do like all of that just to get groceries. But there are things.
But do you though?
Yeah, huh?
But do you though?
Do
you?
I like my meat to taste a certain way.
I'm willing to bet. I'm willing to bet I can live as long as anybody else eating Chef Boyardee. I'm willing to bet.
And no, this wouldn't even be about how long I would live. It's the food. I like my food to taste like my food to taste good. Like chicken I get in my local grocery store is not gonna taste as good as chicken.
Yeah, I ain't gonna lie, boy. Oof.
That just got killed 48 hours ago.
Hey, that chicken my wife be bringing home. I don't know where she getting it from, cause Tyson ain't got nothing on that. Tyson ain't selling that kind of chicken. They ain't got it.
Definitely not.
Now see, now Moji, now you talking my business. See, I buy it because of the taste. I buy it because of the taste. It just tastes better. Because I can guarantee you, and don't get me wrong, like I eat some stuff that I don't like how it tastes. Freaking broccoli rabe. I'm gonna tell y'all right now. You put broccoli rabe on my plate one more time, I'm canceling Christmas. I freaking hate broccoli rabe. That's the most disgusting vegetable on the planet. I don't think it's. You know what I'm saying? Like I'd eat raw beets before I eat broccoli rabe voluntarily.
Broccoli, you mean raw broccoli?
No, it's called broccoli rabe.
Broccoli, wow.
Yeah, it's got this like really sappy taste. Yeah. Definitely blessed. Like she don't buy nothing but the best, man. You know, so it's all good. I ain't I ain't mad at it. I take it. I take it. Um, how can you be mad at that, right? Okay, Netflix is back in the green, y'all. Okay, all right. Notice Spy is bouncing off of this negative 20%. Y'all see this right here? See Spy bouncing off this negative 20%. So this is what we have here. We call it the strong level, right? So once you get above negative 20, all the pullback, right? If it stays above negative 20, that's the strongest trend you got. Y'all with me on that? Just making sure I catch that one. So when you see a market pull above this point here, it's definitely a good look to try to stay above that. Oh snap! I just thought about something. I have to think about that first. Let me think about that a little longer. Interesting. Okay, Janella. I see you. I see you. I see. Oh, okay. So your daughter got the Amazon done, huh? Nice. Beef is good too. Beef is good too. She doesn't eat beef as much though. She doesn't eat beef as much. Um, I need to top off this this cup real quick, y'all. Give me 2 seconds. All right, I am back. So look at that. Yeah, so y'all caught that whole part about the negative 20, right? Y'all caught all that? So that's like your Williams percent range analysis right there. So what I did was I combined the Williams percent and the Fibonacci because they're pretty much the same thing, you know? Pretty much the same thing. Hmm. Interesting. Very interesting. How about this, y'all? Inside range, and we mark what's the nearest Fibonacci level to it. What y'all think about that? So it's inside the range near the negative 20%, for example. Would that work?
What we doing?
Hmm?
What are we doing?
Remember last night I was saying that that I wanted to have it like mark how much of a retracement we've had, right? As it's pulling back inside the range. So I was pretty much saying, um, I was pretty much saying, what if because I couldn't get it done last night. I tried, but I couldn't get it done. So what if we just had it mention which one of the Fibonacci levels is closest to in the moment? That'll work, right? Yeah, I can't wait till I fill everything in there. Once the algorithm knows everything about this whole sheet, which sadly to say, I'm probably going to be building this whole language engine from scratch at some point, um, in order to make sure that I get, in order to make sure that I get like everything filled in, exactly how I want to fill it in. Um, so it's kind of like filling everything in one thing at a time, you know. So it'll be like, oh, if this happens, this happens, this happens, it's called a breakout swing to the upside, and it'll log that in. You know, if this happens, if this happens, or this happens, that's a, you know, um, uh, let's say you know, uh, uh, a new trend to the upside, pretty much. So all of our alpha's back. I don't know what was going on with Google yesterday, but it's back today. So Moji, that point I was trying to tell you yesterday, are you looking? Can you see this?
One sec. I lost it.
Let's just zoom in real quick.
Okay. Yeah, I remember yesterday it wasn't pulling up. Yeah.
So this is what I'm talking about right here. So you see this? I know exactly how much money I'm going to invest. I know exactly how much. All right. So, pretty much whenever I'm looking at a stock, right, I say, okay, 0.5%. But I already know what numbers attached to 0.5%.
Gotcha.
I already know that. And then my portfolio is sorted out by what I invested the most in down to what I invested the least in.
Uh-huh.
So I don't have to actually come over here and reference this all the time. Because I know if, like I said, if I go there and I'm like, oh, okay, let's just say this 0.5% was like 50 bucks.
Yeah.
Let's say this was $1. Let's say this was $1.50. Let's say this was $2.50. Let's say this was $4.50, right? So basically, it's like, okay, cool. I come and I look and I'm like, oh, I got, what did I say? I got about 75 cents invested there. Now I know either I lost some money on something I invested $1 in, or I made, you know, or I made a bunch of money on what I invested 50 cents in.
Gotcha. Yeah.
I know either one. So all I need to see is it positive or negative. I see it's positive. Okay, cool. So this is one of them ones I invested $5 in, or $50 in.
Yeah.
Right. Okay, cool. Let me take that $25 and put it in cash.
Yeah. Something that's definitely harder to do when you start out because, you know, you're starting out. But now that, you know, again, like I'll start being like, well, these are my long-term stocks and I don't care what happens and blah. It's that consistency with how much am I putting in at the get-go or plan to put in at the so that helps. That really helps.
You got it.
Because I was just like, I could keep taking it, like, because, you know, if some, like, okay, like Merck, right? Like, we've had Merck for a minute now. So we've already taken, like, I've taken probably, like, profit twice already. So I've definitely taken my equity out, but it keeps going up, you know? So.
Exactly. Now here's what's going to happen. Now, one day, okay, wait. Let me not go there yet. Let me start with this. Okay. I want to say something to everybody right now. Let me make sure here. Let me do this real quick. Let me make sure. Let me just in case, you know, just in case. I'll send it all the invites just in case. All right. So let me say this, right? Guys, the goal of your investment is not to see your stock go up. The goal of your investment is to see your ability to invest more go up. I'm going to repeat that. The goal of investing is not to see your stock increase. The goal of investing is to be able to see your ability to invest increase, right? So that means that the only way I achieve that goal is if I end up with more cash in my hand. It's the only way I actually achieve that goal. Right? And see, the stock market, you know, y'all remember when Matthew McConaughey on Wolf of Wall Street was like, it's a fugazi, it's a fugazi, you know, it's not real. You know? Obviously, he's, you know, that's not true. But here's the part that you want to take from that. Here's the part that you want to take from that. If you don't bring that money back into cash, right, then you didn't gain anything per se. I'm gonna put it in a real world situation. I'm putting it in a real world situation, right? I want you to imagine. I want you to imagine my guy Phibbs down there. He's got a coffee shop, you know. and the coffee's really good. He gets the best, beans from Colombia, wherever he gets them from, right? And there's just nothing like it. And you know, the way that they handle their service is also different. Something about it. Whatever it is. You come in and they have like massage chairs for you to sit in while you drink your coffee. Let's say. So it's a cup of coffee and a massage, right? Let's say. And you're like, okay, I want to invest in that. I like this idea. You know, um, he says he wants to take it around the country, and you say, I got the money to do it. It's okay, cool. You give him the money, he opens 10 more stores. All right. The value of the company goes from, let's say it was worth $3 million when you gave him the money. It went from being worth $3 million to being worth 30 million, right? When he opened up the other 10, right? Now, okay. Let's say you own 10% of that. So you watched your $300,000 value of your investment go from 300,000 to 3 million. But you never get any money, meaning he never pays you anything. There was no royalty deals or anything like that. It was just, the worth of the company. Now I want you to imagine you you want to make another investment, right? Want to make another investment. And so, you're like, you know what? My last investment worked out. I'll make this investment as well. Right? So you go dig in your bank account again. What's wrong with that picture? What's wrong with that picture? You go to your bank account to get the money to make your next investment, even though your other investment has already increased by what's that, 900%. What's wrong with this picture? Why are you going in your bank account again? Why didn't your other investment pay for this investment? What was the whole point? Somebody help me out with this. What was the whole point? If I gotta go dig in my pockets again when I want to make another investment, what was the point of the first one? So you see, it's a better idea to let the current investment prepare you for your next one. All right. So my deal is, okay, cool. Okay, cool. I own 10% of this. I want to get paid out in cash. All right. And he's welcome to buy back my stake of the business from me anytime he wants. Cash me out. Something more of that nature will work. Or I can pull equity anytime I want, whatever I want to do. All right. But if I got to go dig in my pockets again, the next time I want to make an investment, we got a problem. Okay. We got a problem. So to me, the point of investments is always to exactly, you haven't made any money, Janella, right? You haven't made any money. So to me, the point of investing is to bring that back to cash. From cash to investment, back to cash. You got people talking all this talk about, government gonna want their cut and yada yada yada. Yeah, take your cut, government. Go ahead, take your cut. All right. You ever heard the term before? People say, 60% of something is better than 0%. Better than 100% of nothing. All right. They can have their 40%. They can have their 50%. They can have their 60%. Whatever it's going to be. Take it.
I always think it's funny when people are like, but the government's going to take their piece. And like you still have the majority.
Right.
You have more than you didn't have yesterday.
Right. And those gains get taxed less and less over time, by the way. Right. So I'm just saying, the longer you own an investment, the less you pay in taxes.
That was also one of the earliest things you taught us that definitely helped with my stocks was margin of safety, right? Adding that as a buffer in there. And because before that, it was just like, oh, it's up. Yeah, but what does that mean? How much have you gotten back? How long have you held that investment in? So yeah, margin of safety and like a return on investment and knowing that before you even,
Yeah, you just have to, like my goal is always to get it back in cash. That's my goal. So like even like when we're trading, if you guys haven't noticed, like okay, cool, let's put that trade back in cash. And then, you'd be able to say, okay, cool. With what I just put back in cash here, I just did what what I had to do here, and hey, cool, now everything's mapping out, everything's matching up, you know. So those VIX positions, how many times over have we probably paid for those VIX positions by now? Those are our core positions. So whenever we're ready to cash out of those, that's all profit. Even if they were down, it's all profit at this point. Those VIX positions allowed us to do, a good amount of the trades we were taking over the past couple of weeks. Because without those, I'd be asleep. I promise you that. I'd rather sleep through some of those days. And I really would. Some of y'all just haven't known me long enough. D-Ron was asleep. Trust me. Taking naps. All right. So on days where I don't have balance, no, I'd rather just just chill out. You can create that balance. You can do a lot more with that. All right. So Sterling's down to a neutral outlook. Let's see what CK's got going on. And this is a very, very strict. Wait a minute. Caramba, hold on. Oh no, that's right. That's right. G48. Okay, perfect. Okay, all this is good. Oh, good. It was this I was looking for. Good Lord, their price to book is 8 times. Yeah, Sterling ran up. That's crazy though that they ran up as much as they have, but they still have a neutral outlook. All right, so really, it's all valuations. It's all valuation. All right. That's one of the things that I'm gonna be breaking down in the book as well, right? Like what it means to so like I'll have like these different sections, right? So it's like, okay, cool. Like what does it mean to actually miss this group of things here as opposed to this group of things? Right? Like your balance sheet stuff. So your balance sheet integrity, your vital signs, your F score, your debt coverage, your quick ratio. That's a bigger deal. That's a bigger deal right there, to be missing those things. Right? Then, your price to book, forward earnings growth, all that stuff, right? These are all valuation based, or your 5-year expected growth rate, right? I'm sorry, no, your earnings growth trailing 12 months, I meant to say, all right, like that. It's a totally different ball game, right? So cool, okay, cool. Last year wasn't that good. What does it look like looking forward? We can move on from that. So we'll see how this stuff starts playing out. I can understand that, Janella. Yeah, it happens early on. It happens early on. You get over it really quickly once you start to, put the pieces of the puzzle together. All right, Seagate. What we got with Seagate? Ooh, a hold with a negative outlook on Seagate. All right, all this memory stuff has been driving these stocks higher. Now we're about to find out who's here to stay and who's not, y'all. What do y'all think about this new analysis system? What do y'all think about it, man? Like, it's really putting some people on the hot seat. What are y'all thoughts? It's really showing like who's just hype and who's really got it.
I like that. I think my concern is who are we replacing them with? Are they going to be any better? So we just waited to see it play out a little bit further.
Mm-hmm.
Yeah,
definitely. They're gonna have to be better in order to replace them. All right, it can't be the same and get in. All right, look, Broadcom hold, but they have a neutral outlook. See the difference? You see the difference? All right, so look, their price to free cash flow is just so basically. Okay, look, so their ROI, right? Let me break this down for you. You ready? You listening? You with me?
Yes, I'm with you.
Watch this. Let me break this down. This is how crazy this new system is, and I'm loving it right now. I'm absolutely loving it. And what I love the most about it is like writing the book brought me here. Because as I'm writing, like I said, as I'm writing it, I'm like, no, we can't do that. We gotta, because I'm realizing how we have to get it to everybody and make it, as Anisha and I was talking about this morning, make it more, like to the basic level of understanding, still efficient, still effective, right? So I started saying, okay, cool. I can see some easier ways of doing this. So F scores, obviously, we already know that. That one's set in stone. The price to book, though, right? Okay, is your price to book more than 1.5 times the average price to book in your sector or in your industry? All right. So right then and there, this becomes a metric to watch out for. Now, by the time I'm done with the book, this and the price of free cash flow may end up being 2x, because I'm thinking in terms of standard deviations. You know what I mean? So they may end up being 2x, and in that particular case, you'll know that I'm looking at standard deviations. Right now, they're 1.5 because I'm looking at value. Right. So from a value perspective, you go 1.5 instead of 2 deviations because pretty much you go 1.5 instead of 2 deviations because it's pretty much saying I'm being conservative. So right now we're being conservative, and we'll see if that plays out. Going. So I'll probably test it out when we have to analyze them. For the final time, right? So, but clearly, if it was 2, then these guys right here would be a buy with a positive outlook right now, Broadcom. But which companies would it actually save? That's the question. Who would this shift save? Now, but the price to book is 1.5. The return on investment, you see, it's a negative 1.12. So yes, they miss on this, but you kind of know that they're right there because that means that they're pretty much in line with the industry. So I would actually kind of give them this point. Not obviously I'm not going to give it to them, but what I'm saying is this means that they're in line. This means that they're in line with the market, right? So as long as they're not down too much, so we'll figure that those things out there. So we're doing more of like the taking one metric and comparing it to the industry, right? And how I have it is, if we can't get the ROI, it replaces it with the ROIC, right? So it's just subtracting the average industry return on investment from our return on investment. It's subtracting those two from each other. All right. So that way you can see, are we better or worse? So if it's negative, that means we're lower. If it's positive, it means we're higher. Pretty simple. Your price to free cash flow, we're looking for 1.5 times. So right now, where's it at here? The price to free cash flow for the industry is 35.2. The price to free cash flow for Broadcom is 58.5. So, you can see they're only at 40 on the RSI. So clearly, that means that, like I said, so that 2x might be necessary, So we'll think about that later on down the line. Now, and like I said, probably on our next assessment. Right. So that'll give all those companies a chance to save themselves, right? And if they can't do it with the 2 times the price of free cash flow, then I'm sorry, like that ain't got nothing to do with me, right? Earnings growth is there, sales growth. This is 5-year average sales. 5-year average sales, and how much better are our sales than theirs? Pretty much, all right. And so that's why I said I might do I might just start dividing it like I'm doing with the price to book and price to free cash flow. That way I can say, okay, cool. What's the threshold? The threshold will probably be 85%. Probably be the threshold if I actually did that, right? So like, for example, right here, right? If I went this divided by this, I get 1.23. If I said that I need that to be at least 85%, right? It's greater than 0.84, right? Then right out the gate, it actually helps to to kind of nail that down, So these are all your models here, so forward price earnings growth, you know all these other ones. Your turnover ratio is right here. All right, so that's a negative here. So again, so these are the ones that are doing the comparatives. I could definitely see myself possibly, lining that up like that. But I prefer it this way though. To be honest, I prefer it like, how much for like the sales, how much more are you doing? But for the price of free cash flow, making sure we're not more than 2 times the price of free cash flow of the industry. I prefer that. The price to book, make sure we're no more than 2 times the industry, right? So we don't want to get outside of the 2 standard deviation band because then that becomes overvaluation. Is how I'm looking at it. So here we are, and I guess we did just start. So, You know how I am. I'll change things right in a minute, right in a moment. Oh, we're still pumping, huh? Go ahead, Alicia.
No, I was gonna say yes, sir. Yes, you will. But that's a good thing, though. That's a good thing.
Well, you know, if I know it's for the best, you know,
Yes. Mm-hmm.
if I'm uncertain, then I won't do it. But I'm certain that this is going to be for the best. Is to say, okay, cool, we're going to look for over 2. I'm certain of that because it actually allows me to explain it better as well. You know, because then I can always take somebody and say, okay, cool. Now, if you want to be conservative, you do 1.5. I can always tell them that, right? If you want to be conservative, do 1.5. Right? If you really want to nail the companies down, do 1.5. But you know, the better it would be to do 2 standard deviations. Right? So like I said, so now you got to buy with a positive outlook here, right? Nothing else here is the same, you know. So you can see all these. So your free cash flow margin, your debt coverage here, right? How much better is your debt coverage than the market? You know, pretty much, right? Your turnover ratio. These semiconductors, their cash flow coverage is just not it. Right? There's a lot of accrual accounting going on over there, but at least Broadcom was able to achieve a 7. Nvidia not so much. Oh, buy with a positive, right? I'm gonna go backwards real quick. I'm gonna risk it. I'm gonna risk going backwards. You know, Jimmy gonna get tired of us real soon. Okay, so still a buy with a neutral.
For my sanity,
Yeah.
when you say Jimmy, do you mean Jimmy from Dreamgirls? I just want to be clear.
Nah.
Okay. That just keeps popping up in my mind all the time. Just checking.
No, not Jimmy from Dreamgirls. Actually, you want to hear the funniest part? So when I say Jimmy, I'm thinking Jimmy from Spider-Man, from Superman.
Trish.
You know who Jimmy is, right? From Superman.
Kelson, I know.
Yeah, I'm thinking that Jimmy, because you know he's had them run around doing everything. You know, Jimmy, where's that? You know what I mean? And you know,
He was on it. Okay, acceptable.
Right. So basically, you're pretty much saying, hey, you know, we're pretty much like running Jimmy around right now is what we're doing. And sooner or later he get tired. He like, hey, look here, cuz like, you done asked me to do like 15 stocks today, bro. You know, so Nvidia gets the Seagate gets a neutral outlook. We don't know what's going to happen with Nvidia. So Seagate got a neutral. Yeah, y'all saw that, right? They got a hold with a neutral instead of a negative there. Oracle is definitely not a hold with a neutral. I probably shouldn't even pull them up because Oracle about to be out of here, y'all. Out of there. Let's see here. 1, 2, 3, 4. This is 5 points. All right, this is 5 points. So even if this was a point, they still a sell. All right, and you know they got the alpha though. You know what I mean? But you know the world is just telling us right now that you know what, we got enough good stocks. We don't have to own Oracle. You know, we've been there. We tried that. You know, like we talked about before, right? But look at how this is what I was talking about the other day. Look at how they've been coming down. Our system has already told us to watch out for them. That's what I was saying the other day, Alicia. Right? They've been told us to watch out for them. So now they've fallen into a sell, and so okay, you know, you're out of here the next time I see you. All right, the next time we have to do next time we have to run through these analysis, they're gonna be gone. Goners. Adios. No remorse. No remorse. Sell. Definitely a negative outlook. All right. Nvidia. Let's give them another shot. So will Nvidia actually will they actually do better now that we've given them the price to book and price to free cash flow leeway?
I think so. We'll see.
Let's see. Dell is up 5% right now. I know that much. So that means so if they fail price to book, let me just go through these numbers real quick. Look at that. I was about to say if they fail price to book, that means their price to book is more than like 27. Look at their price to cash flow is 54.25. That means this price to free cash flow here for the industry has to be at least 27. Let's just say 28. They might get away with this one.
You're doing half, right?
Yeah, because they have to be basically no more than 2 times the industry. So that's why I'm cutting it in half. Yeah. And this is how I always get it done, pretty much, guys. Like I always just do as many as I can. I kind of just leak them in, you know. So like leak it into my workday, you know. So just like just get it, Okay, cool. I'm gonna, let me go get a few of these done real quick, and I just go and I just do a couple of them, and just so that way that's how the index always stays up to date. All right, price of free cash. Oh, they made it. They made it. You're right. They did it. They did it. Because so this was the one they filled on a little bit right here. So they're gonna be what's that's gonna be then? Is it gonna be a hold with a neutral or a buy with a neutral? That's the question. But by the way, that still doesn't change the fact that their grade has deteriorated. Jimmy from The Office. Oh, that's crazy. Jimmy from The Office. I'm just realizing you mean from The Office, like the TV show The Office. That's crazy. They do have a Jimmy too. They got a Jimmy. Everybody's got a Jimmy. Oh, neutral outlook. There it is. See the outlook already there?
But is it a hold or is it a buy?
Let me see here. So let me see. 1, 2, 3, 4, 5, 6, 7, 8. It's going to be a buy. So I know their sales are definitely better than the industry over the past 5 years. It's going to be a buy. Come on now. Get to it, Jimmy. Jimmy holding everything up, huh?
It's definitely discounted.
Mm-hmm.
I'm talking about the price thing.
Yeah, I know what you mean. Mm-hmm. But yeah, look at that F score though.
Mm-hmm.
This actually proves all the theses right because like things have been now outperforming Nvidia, right? So if you have a low F score and a high price to book, things are gonna a lot of companies are gonna outperform you until you fix that problem. Now we already know what to buy. We know what to buy. Let's keep going. All right, write that in. All right, Nvidia, you off the skillet. You're off the skillet.
I don't know why that makes me happy, but it does.
Well, that's the thing, right? Like when you know you've done something to improve things, you know, and something a company proves it right. You know, I'm always happy about it. You know, like Apple, like I always use Apple as my barometer, right, all the time. So okay, cool. If Apple can pass the test, you can pass the test. You know, um, if Apple can't pass the test, I need to start thinking about okay, what am I doing? You know, that may be a little too harsh here because you know, like because most of the tests that I use, Apple should be able to pass except for the quick ratio. You know, and of course the app score is going to change from time to time. Oh, okay, flashlight, neon lights.
Apple's RSI is up a little. Well, actually double compared to what it was.
Is that 12?
Only 15. 15.
Is that 15? Oh, look at this, guys. Look at this. Look at it. Look at this. It's a W swing, baby. Let's go. Okay. Okay. All right. I got to go into my bag real quick, y'all. Hold on. Hold on real quick. It's not mentioning the W swing here. Let me see what's going on here. One second here. Okay. So Rebar, what's going on? I'm about to do a tiny bit of coding real quick, so don't mind me, man. You could just talk to me. Just talk to me. Okay. Um okay. I see you, I see you, I see you. Now, let's see here. Like I said, I'm doing a little coding over here, guys. Doing a little coding over here. Yeah, semiconductors definitely been doing all right. They've been doing all right. I own my fair share of semis, but no Micron right now. I'm actually waiting to buy some Qualcomm soon. We'll see what we can do with that. Which, by the way, Alicia, that's who would have replaced it. Who would have replaced?
NVIDIA.
Yeah,
Got it.
that's who would have replaced them. I already had them ready. They was in my back pocket for a while. Sure. Oh, that's crazy. So, have I ever reviewed them? Yeah, yeah. No, they're good. They're good. They're good. I'm just waiting on a better price for myself. To be honest. Yeah, I reviewed Micron before. I actually used to own them in the past. This is crazy. Look at this, guys. So it says here. So, um, they're calling this a conductor code, right? So basically, I came back to say, okay, look, I don't want to make any changes. I just want to make you aware of my code here, right? Is what I'm telling it, right? To study the code. So they're calling it conductor code, right? So when the state machine outputs a string, right? This code deconstructs the string using search. We just talked about search algorithms last night, right? Using search to decide which of the 20 strategic conditions to trigger. That's crazy. We just talked about last night how this is like basically I'm building it just like a search algorithm. So that's its analysis of the structural trigger. It's a search algorithm. Very nice. Able to TP print out a string might be calling the string when it's trying to function instead of printing it. I'm gonna see right now. I'm gonna see right now. Saint, we're about to find out right now. Um, find out right now. Okay, here goes nothing. See, W swing. Ah, okay. All right, let's see what we got here. One second here. Mhm. Mhm. Uh, mhm. Okay, so I'm now gonna I'm now gonna add the micro trend for the first time. Um, okay. So the micro trend is there. Okay. You said you're gonna miss him after this push, huh? Hey, man. Sometimes you gotta do what you gotta do. You know. Sometimes you gotta do what you gotta do. All right. So let me just write this down here. So micro trend. Budget 24 and 25. Huh? 24. Okay.
So it's like it's fighting right now, man. That Jones. Crazy. If I missed the first run with on Netflix, and now good time to get back in.
Um, Give me a second. Let me come back over there in a second and look at the chart. Just give me 2 seconds though, because I haven't looked at it since this morning. Well, where is it at right now? Is it up or down? Or is it flat? What is it looking like?
93, but it's bouncing. It's bouncing off. Hold on 1 second. It's bouncing off of. I'm looking at the Robinhood chart. It's bouncing off of. It's started 4. 390. It's not. It's like going a little bit past that, but coming right back up. But it's now it's a little bit down past it.
Okay, okay. Yeah, that
93 now.
Okay, yeah. I'm gonna be back over there in 2 seconds. I'm gonna have to look at it. More seconds there. Okay, we got our first introduction of the micro trend. Coming up. Okay, let's see. Mhm, mhm, mhm. Oh, we look at that full paragraph, y'all. Y'all seeing this? That's a whole paragraph. Let's see what it says here. They're trading above average price. Okay. Trading just above average price, which is priced at 145.10. Looking at the volatility, the price is showing a 0.17 standard deviation from the 20 period SMA. This represents high density compression, indicating an imminent volatility squeeze. Technically, we are identifying a neutral consolidation following the inside range trigger we observed. From a strategic perspective, this setup is an energy coil accumulation prior to the next vector. Consequently, maintain a neutral stance and wait for further structural confirmation before committing capital. Now, watch this. All right. So, what we got here? Hmm? Oh, yeah. Okay, now W swing institutional bottom, institutional top. Okay, cool. W swing reversal bottom.
Have something I want you to look at too when you get done with Justin. Like,
All right. This one is a reversion. Uh, just go reversion. Okay. See what we got here. Bingo. There it is. Y'all see it? Technically, we are identifying a strong W swing reversion bottom following the. There it is, right there. All right. So now we're gonna. Okay. All right. So we're gonna come back to this. I just wanted to make sure that it acknowledges these double, these different. Make sure all these things are acknowledged too. All right. I'm gonna have to deal with the bullish divergence and all that later. All right, let's check out this Netflix real quick. Oh, okay. Still out over here at this 50% retracement, huh? So yeah, I guess I would say definitely. But of course, your stop loss is going to be tighter than ours, Justin. Obviously, because you would or so you have two choices. You go with the same stop loss anyway that we have, which just puts a little bit of a tighter squeeze on it, right? Or you put your stop loss from the current price right now. But you have to calculate it yourself. But this is fine. See, what I was concerned about was it below this point right here? That's what I was concerned about. See the 50% retracement. So, but I didn't know how to ask you, like, hey, is it below that thing? Because basically it was on my chart. So yeah, I mean, as long as we're still above this right now, yeah, I'd say sure. Join in. It's not that far off from where we got in originally. These recent contracts, and we're down about 5. Well, I'm down about 5% right now, Justin. $94 calls for April 17th.
Okay. That's got it. And 84 for April 17th.
Nice. One of these days, I'm gonna show you guys how to count that leverage up. Writing it down right now. I'm about to get to some writing, so I'm not gonna do it right this very second. We were waiting for something to load up in here, wouldn't we? NVIDIA was waiting for. So yep, a buy with a neutral outlook. There it is. Let's see if we can catch one more out of the deal. Google. What you got for us, Google?
Forget about me.
Oh yes. What was you want to look at there?
On the indicator, let's go to AMD.
AMD, okay. And let's type this in real quick. Google hold neutral. Lord, there we go. All right, AMD. Did you see that full paragraph we just got just now?
I did.
It's actually more fluid. right? I'm gonna read it in a second. Okay, AMD.
Okay, so the mood is neutral. The mood ring is neutral.
Hmm.
We're past the third deviation, basically.
Hmm.
We're overbought.
Hmm.
When should I look at taking a position to the downside if I was going to?
If you were going to, okay. So now this is going to be big moves you're looking at.
Okay.
We got to start with that. Right? Because if you're going to do this, because I'm looking this crazy, these numbers are crazy. What I'm about to say, right?
Oh, okay.
So you want to at least flip the micro trend. So if you did that at least,
That's what I thought.
Right.
And I meant to say that. I think I wrote that down, but I didn't say it to you. But yeah.
but check this out though.
Okay.
When you flip the micro trend, you got the stop loss right below it. You might as well wait for that. Right? Because basically, you're hitting the stop. You're hitting the stop coming from the pre. You know what I mean?
Yep. Just wanted to make sure I was on track with what I was thinking in my thought process. So
Right. That's a big drop, though. You see that? That's a big drop to get back to that micro trend. Crazy.
it really is.
Right. Then you can target the weekly pivot and the 5-day trend. See those two matching?
Yep.
Put your target there. All right. If it breaks through that, then you know. But yeah, I mean, because like, you know, this is one of those situations where if you wanted to, you could always take the short right now, but does it pan out the way you want it to? Is the question, because there's a 70% chance that it continues in the direction of the market, and that's your issue. All right. If the market's weak and they're strong, then there's your arbitrage opportunity. All right. But the market's trying to pick back up now. So yeah, that ain't it. Now look at here, Netflix. I got one thing to say, one thing only. All right. Quit playing with me. Okay, quit playing.
I'm about to take my money.
No, it's just it's good. We good. Oh, let's read this. Let's reread what it says here. So currently AMD is trading just above previous high, which is priced at 252.90. All right, looking at the volatility, the price is showing a 3.18 standard deviation from the 20-period SMA. This represents a statistical black swan event, 3 sigma, that's what that stands for, demanding immediate risk reduction. So if he was long, shave it off. Technically, we are identifying a mean reversion gap, RSI extreme, following the change of character to the upside. Structural trigger, the structural trigger we observed. So from a strategic perspective, this setup is climactic buying frenzy, likely to encounter supply overhead. Consequently, maintain a neutral stance and wait for the structural confirmation before committing capital. And that would be your micro trend, right? Boom. And that's why I say, so it's like, this isn't meant to tell you what to do. It's meant to confirm what you already know. Okay. So you see, it just pretty much said exactly what I said, which is, just hang tight, wait for that structural shift, right? And good to go. So this is going to be a great helper for you guys to, great helper. So earlier, what I said to you guys earlier is that they call this thing the conductor. They called it a conductor. So you said I think some of y'all said y'all like the keynote algorithm yesterday. Some of y'all said no. I wonder what's another term for let's see here. Hmm.
I was going to say put advise in there. You said conduct, teach.
We had it.
I don't know if that'll change the terminology.
Advise. It's also can. To direct the investigative or exploratory efforts of a group. That is exactly that's crazy, right? I like how they put that. They understood what I was trying to say. Huh? Direct, eventual, okay. I'm more so looking for numbers. Strategist. Oh, what about the journey algorithm? No? No, they have mid journey. I forgot. Hold on, never mind. Okay, we have the keynote algorithm. What about the D note algorithm? Joking. Don't do it. Just ignore that one. All right, never mind. I give up already. I ain't got time for this. I gotta finish writing this dang book. So I'll catch up with y'all later. I'm so close. I'm so close, y'all. But I'm still so far at the same time. But I gotta be done by. So my goal is to be done by February 1st. That's my goal. So to be done writing because I'm not gonna be messing with this much more. I had to do that last thing that I just did though. But yeah, my goal is to be finished writing like all the editing of the book by February 1st, or at least that I will accept all edits by February 1st. We'll see. We will see.
Oh, you're gonna do it. You're gonna do it.
I know one thing. I changed that introduction again, and it's amazing. It's absolutely amazing. I would read y'all some of it, but this is the one that y'all can't hear no more. Now I'm done letting y'all preview. But let me tell you. So basically, I was writing the conclusion to the book, right? And you know what I remembered? This is why you just got to be like, school. People that talk down on school. I'm like, y'all better get out of here. I remembered in school where they always talked about like your conclusion should be almost a reminder of your introduction, and a breakdown of what you put, you know, um, after that, you know. So like, um, after that, I wrote the conclusion, and I was like, yo, okay, let me go back and make sure I'm starting how I'm ending. And that just turned out to be the best thing I ever did so far. Best thing I've done so far. Because now it's leading me back into the book. I deleted an entire section out of the chapter for the 12-point investment grade without even thinking twice. It was crazy. Like I was just like, you can go. And I didn't think twice about it. So like, yeah, like that moment right there just made it capable for me to just get it done, because now I know exactly what I want the end result to be. I wasn't certain all these other times, but now I'm certain what I want it to be, and so as I can read through it, and it actually starts to make more sense. So I'm gonna try to get it done by February 1st, and then I'll have it uploaded. I'll have it uploaded by sometime in February, and then the whole what do you call it? Having the whole pre-order and all that, like just getting the date set up, the release date set up for March 17th and all that. So looking forward to it. I'll see you guys later. Everybody be blessed. Stay well. I'll see y'all soon.
Later.
Continue,